Welcome to our comprehensive guide on the securities market from an investor's perspective. Whether you're new to investing or looking to deepen your understanding, this video will walk you through the essentials of the securities market, its structure, and how you can participate safely and effectively. We'll cover the roles of key institutions, the types of securities available, and the processes involved in investing. By the end, you'll have a solid foundation to make informed decisions and navigate the market with confidence. Let's begin by understanding what the securities market is and why it matters for investors like you. Securities market in India is governed by a robust regulatory framework designed to protect investors and ensure fair practices. The Securities and Exchange Board of India, or SEBI, is the primary regulator, established in 1992. SEBI's mandate includes safeguarding investor interests, promoting market development, and regulating market activities. Four main legislations form the backbone of this framework: the SEBI Act, the Companies Act, the Securities Contracts Regulation Act, and the Depositories Act. Together, these laws empower SEBI to oversee the issuance, trading, and transfer of securities, ensuring transparency and integrity in the market. Securities are financial instruments that represent ownership or a creditor relationship with a company or government. The main types include equity shares, which give you ownership in a company and voting rights; debt securities such as bonds and debentures, which are essentially loans to the issuer; derivatives, whose value is based on other assets; and mutual funds, which pool money from many investors to invest in various assets. Understanding these categories helps you choose investments that align with your goals and risk tolerance. Securities market is where companies raise funds by issuing securities to the public, and where investors can buy or sell these instruments. It's a vital part of the capital market, channeling savings into productive investments. The market consists of two main segments: the primary market, where new securities are issued, and the secondary market, where existing securities are traded. By investing, you not only aim for returns like dividends or capital appreciation, but also contribute to the country's economic growth. Primary market is where companies or governments issue new securities to raise capital. This includes public issues like initial public offers, IPOs, follow-on offers, rights issues, and bonus issues. Once these securities are issued, they're listed on recognized stock exchanges, making them available for trading in the secondary market. The secondary market is where investors buy and sell existing securities, providing liquidity and price discovery. Both segments are essential for a healthy, functioning market. Market infrastructure institutions, or MIIs, are the backbone of the securities market. They include stock exchanges, depositories, and clearing corporations. Stock exchanges like BSE and NSE provide platforms for trading securities. Clearing corporations ensure the settlement of trades, guaranteeing that buyers receive their securities and sellers get paid. Depositories, such as NSDL and CDSL, hold securities in electronic form and facilitate demat services through depository participants. These institutions work together to create a secure and efficient market environment. Market intermediaries are key participants who facilitate smooth transactions in the securities market. These include stockbrokers, depository participants, merchant bankers, registrars, and share transfer agents. They help investors execute buy and sell orders, provide information, and ensure compliance with regulations. All intermediaries must be registered with SEBI and adhere to strict norms to protect investor interests. Choosing reliable, registered intermediaries is crucial for a safe investment experience. For investing, it's important to define your financial goals, investment objectives, and risk appetite. Are you looking for steady returns or willing to take higher risks for potentially greater rewards? Your age, financial situation, and future plans all influence your ability to take risks. Once you've set your goals, decide how much to invest and for how long. Remember, every investment carries some risk, so understanding your own preferences is the first step to building a successful portfolio. Investing in the securities market involves various risks. Market risk, or systematic risk, affects all investments due to economic changes. Unsystematic risk is specific to company or industry. Inflation risk erodes purchasing power over time, while liquidity risk arises if you can't quickly buy or sell an investment. Business risk relates to a company's operations, and volatility risk comes from fluctuating stock prices. Currency risk affects investments in foreign assets. Being aware of these risks helps you make better decisions and prepare for uncertainties. While risks can't be eliminated, they can be managed. One effective strategy is asset allocation, diversifying your investments across different companies and asset classes. This reduces the impact of poor performance in any single investment. Regularly reviewing your portfolio and staying informed about market trends also helps. Remember, making informed decisions and not relying solely on market sentiment is key to long-term success. To invest in the securities market, you need 3 accounts: a bank account, a trading account with a CBI-registered broker, and a demat account to hold your securities electronically. When opening these accounts, fill out the forms carefully, note all charges, and specify your trading preferences. Always provide your email and mobile number for important updates, and keep copies of all documents for your records. KYC, or Know Your Client, is a mandatory process under the Prevention of Money Laundering Act. When opening your accounts, you must submit proof of identity and address, such as PAN card, Aadhaar, or passport. Once completed, you receive a unique KYC identification number, valid across all intermediaries. The process can be done online using eKYC, making it convenient and secure. Always read documents before signing and never sign blank forms. Basic Services Demat Account, or BSDA, is designed for individuals with modest holdings. If you have only one demat account and your holdings don't exceed Rs. 2 lakhs, you can benefit from lower or even zero annual maintenance charges. This makes investing more accessible for small investors. You can open the three required accounts: bank, trading, and DMAT, either separately or as a combined 3-in-1 account with a single institution. Power of Attorney POA allows you to authorize your broker or depository participant to operate your accounts for transactions. Signing a POA is optional and can be revoked at any time. Always ensure transfers are authorized and report any discrepancies immediately. Nomination is another important facility, enabling you to designate someone to claim your securities or proceeds in case of your absence, ensuring your investments are protected for your loved ones. Invest in the primary market. Apply for shares during a public offer using forms and payment mechanisms like ASBA or UPI. Shares are allotted and credited to your DMAT account, and if not allotted, your funds are released. In the secondary market, you buy or sell listed securities through your broker using online platforms, apps, or by visiting their office. Always trade through SCBI-registered brokers and keep records of your transactions for reference.